Welcome to Sunday Night Futures Live. This is Bob Desmond, and what we're going to be talking about tonight is why you're here, the futures. We're also going to be talking about the news coming out this week, both economically. Where do we stand relative to historical norms in terms of pricing of the markets? We had a down week last week. Are we cheaper? Are we near fair value? We'll talk about that. We'll talk about some reasons why we should begin to become a little bit more optimistic as we now move from a big inflationary environment to what I believe to be somewhat of a, let's call it a disinflation environment. Not deflation, but disinflation. We'll talk about what you want to talk about. We'll talk about your chart requests. And I'll talk about a trade that I'm looking to put on here. We're going to go to Bitcoin in a moment. But before we do all of this, let's first smash that like button. We're going to give a shout out to our sponsor, which is TrendSpider. Help support the channel. If you want to get their product, which is fantastic, we'll be using it later on. Use that link below, 35% discount code below, cheapest price on the web. Before we get to it and take a look at the futures, which is what I'm dying to do, we'll go to comments here and say, Happy Mother's Day to the very few women that we have. Kat is one. There are a few out there, but mostly men. I think my demographic is, when I looked at my analytics, is like 98% male. So we always appreciate the female perspective. Louis, are we ready to go, Bob? Yeah, we are definitely ready. Bitcoin is going to be a big trade of ours this coming week. We are long. I'm watching the futures on the side of my eye here. Currently, we're short of the Qs, so this is good for us. We'll come back to this. Let everything settle down. Yeah. So Bitcoin, I'm going to talk about in a moment, Louis. The trade I like. You probably heard me talk about this several times already. You probably already know what it is. So there is a massive trade to be had to the short side if Bitcoin moves lower from here. And it's not a short of Bitcoin. It's a derivative play, a vertical play. Buster Stacks, hey, brother. Hope all you guys did right by the moms out there. No, Trader Isaac, no, I didn't watch it yet. I plan on watching it. I will plan. I guess they're on Rumble, I believe. I will be heading over there. I will be watching it. You already had the Associated Press and PolitiFact and all these fact checkers, propaganda organizations already come out and denounce it as being not reliable, blah, 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 blah. So, yeah, I plan on watching it, no doubt about it. Hi, fellow 6 people. Well, we're up to 12 now. Smash the like button. Get more people here. You want more people? Smash the like button. Help the YouTube algorithm find us. Paul, hello. Oil collapsed in the last half of 2008, Bob. Are we setting up for? Yeah, I plan on talking about that later on. You're right on. You're right on the ball with me here. So you're already seeing home heating oil. I'm going to go to that in a moment. Home heating oil is coming in. Diesel is the problem right now, especially with regard to the Ukraine. I have the charts up ready to go about diesel, commodities, and mostly driven by energy. Not so much the food stocks anymore. Food is coming in a little bit. Hey, Jeff. Hey, Bob. Great. Thank you very much. Thank you very much. Appreciate that. And what Jeff is referring to, folks, I sent out premium content to our members, our analysis, our game plan for the new trading week. That is posted on the website, 14-day free trial offer if you're interested. I am the changer. I am a woman. Hey, welcome. If you're a mom, happy Mother's Day to you. Welcome aboard. We welcome the women. Well, I identify. He's savage. That was awesome. I fell right into it. I am a woman. Well, I identify as one, but I have a willy. That's awesome. All right. You got me. Paul. Hello, brother. There's my buddy Franklin. Evening, Bob. The rest of the crew. Franklin, welcome aboard, pal. Ethereum. We can take a look at Ethereum. I don't know how to bring up the chart on TrendSpider, but I can do it on stockcharts.com. We'll take a look at it. Last I looked, they had gotten beaten up. but maybe they bounced back since then. All right, let's get to it. Let's go to the futures. All right, so what we're looking at here is a market that is not shocking. We already are down on the Nasdaq 100, which is up here, lower left, 10-year yield. This is a problem, and I think we're going up higher. Dollar moving up higher. This is a problem. Yield, bad for growth stocks. Dollar, bad for exporting companies, our manufacturers. Why? It's because it makes our goods more expensive overseas. VIX popping up higher. This is a 5-minute chart. Let's go to a 15-minute chart. We're not day traders here. Nasdaq 100. We have broken support. I mean, we gap down. Let's see if we close here. It's early. Let's take a look at the S&P 500. S&P's down spot 0.84%. This is a gap down. So all I care about right here and right now is this. Do we break this support level? Because if we do, it will not set up for a strong morning. But that's kind of good news, and I'll tell you why in a second. It's good news for bulls, as long as you're not long right now. It's all about liquidity right now, folks. All about liquidity. Okay. What else do we have? Here's the Nasdaq 100. We'll take a look at it from a 4-hour time frame. We will be eyeballing to see whether or not we get a new weekly lower low. We may not get it within the next hour. If we do, that means that we're going to see all sorts of fireworks tomorrow morning. So we're holding that 1% mark. The Dow itself is down nearly 0.75 of a percentage point. Here's your head and shoulders setup, left shoulder, head, right shoulder. Here is your neckline on the Dow. So what we want to know is, does the Dow break? Moving on. Russell 2000, the small caps. They are down spot 0.83%. What's interesting here, folks, is that the small caps have been underperforming the larger caps for a while now. But right now, you have your large cap, your mega cap Nasdaq names that are weaker than the S&P, than the Russell 2000. So again, all we care about, do we break to new weekly lower lows? If we do, the probabilities of us opening lower tomorrow expand dramatically. Let's take a look at the dollar. Then we'll segue into commodity prices. Here's the problem. I mean, the dollar is strong. It's very, very strong. But I don't think that this is going to last. And herein lies our opportunity, folks. If you believe that there is no opportunity to get long of this market, there is. You need to wait, though. If you're looking at opportunities in gold stocks, silver mining stocks, silver, gold, whatever. If it's inversely correlated to the US dollar, then you don't want to buy it right now, but you want to start nibbling as you begin to see the dollar roll over. That even includes Dow stocks, manufacturing stocks, dividend paying stocks. Because if you get disinflation, if you see the price of energy begin to come in and the dollar come down, well, then those other stocks which have been beaten down now become very attractive. And you need to jump on those first, not technology. It's growth stocks, manufacturing stocks that you want to look at, dividend payers. So in the short run, this is a 4-hour chart. It's not looking good for those names. And you're seeing it already in the futures. We are breaking out on the US dollar, 4-hour time frame. We have higher lows. It looks as though we're going to head up higher. RSI is strong. Now taking a look at gold, gold is up, but I am not loving it. I'm a bull on gold, but right now I'm very cautious about gold. I'm very cautious about it with the dollar being so strong and yields moving up higher. So that's a big headwind for gold prices, because as long as you have the threat of inflation on the horizon, or I shouldn't say that, as long as you have inflation so in our face right here, right now, all eyes are on the Fed. They're going to believe the Fed's going to be hawkish. They're going to raise rates. They're going to kill inflation. They're not. They're not. Remember, last week, despite the fact that they raised interest rates by a half percentage point for the first time since May of 2000, they also increased the size of their balance sheet. So don't listen to what they say, watch what they do. So gold prices here are still under pressure. I believe this to be a bear flag setup, and that we may, just may, head lower. We couldn't hold that 1900 mark. Moving on to copper prices. Copper really coming in. So this is a negative sign for global growth. It was only a few weeks ago, it appeared as though we were going to rip higher after we got this bearish reversal bar. And nope, no bueno. No consolidation and then a breakout. We consolidated and broke down. Now we are at critical support levels. If this goes for spot 2-3, we're coming down here to 3.97. So, one way to look at it is that it's deflationary. Another way to look at it is that the global economy is contracting. Gasoline prices, they're up a percentage point already. They were higher. They pulled back some. Prices here in New York are 4.49 for cash price for regular. I believe California may be already up at $5. Silver prices, silver flat on the session. I think silver may have bottomed out. Corn, again, another example of how food prices are beginning to come in some. Left shoulder head, right shoulder. This is a 4-hour chart, I should say. And we have broken the neckline on corn prices. So for those that are long on the DBA, names like that, you may want to consider booking some profits there, because it looks as though these prices are coming in a little bit, at least on corn. Let's continue on. Soybeans coming in a bit. They had broken out, and this is a sign of a potential top. We broke out here, we failed. We broke out here, we failed. When you get these failed breakouts on whatever you're trading, stocks, commodities, cupcakes, it doesn't matter. When you get a failed breakout to new all-time highs and then a double top, look out below. You're probably going lower, as you're seeing right now. Here's your failed breakouts. Here is your lower high. And now you're breaking down to new lower lows. Let's check in with wheat. Wheat's holding in there. Let's take a look at it in a weekly time frame. Wheat is looking very good. That's a serious breakout from last week. Wheat looking strong. Did I go over gasoline? I did go over gasoline. What else? Bitcoin. Wow. Wow. Bitcoin now down over 5%. I'm going to talk about a trade of Bitcoin in a moment. Wow. Here's a weekly view. Here's your break. It's a lot of damage there. Let's check back in quickly with the Nasdaq. It did close down below the support level. They're trying to recapture it at current. My guess is that they fail and we break to new lower lows. VIX coming in a little bit. Dollar coming back. Yields pumping up higher. Okay. Let's take a look at the economic data coming out this week. First, let's check in with comments. Oil collapse. Oh, we already went over that one. Today's news: G7 nations pledge to phase out. Yeah, good luck to them on that. Our LNG play, Cheniere Energy, looks beautiful. Bring up the chart of LNG. It's beautiful. Patrick, hey brother, happy Mother's Day to your wife as well, and your daughter. Paul. Yeah, we're it. I mean, this is the grift. I mean, it's fine that our LNG companies are making money, but we had to create a war to make it happen. Okay, MP. What's MP? It had great earnings. Okay. All right. Hola, billionaire. All right, diesel oh yeah, diesel's ripping through the roof. Check your phone, William watching. Okay. I think Bitcoin and crypto might be rough. The State Department is claiming Russia and North Korea are using them as bypass sanctions. This might be true, but I believe that this is their excuse to ban. Could be. Could very well be. All right. I'm checking my phone here. Here's a photo of Pat, who's on here with his grandson, William, handsome young lad, watching us. Let me see if I can get it up there. There we go. Watching us live. Hey, William. You have a great granddad there. All right. All right. What's coming up this week? We have economic data. First off, let's talk about last week's economic data. This is bad stuff. Non-farm payrolls were good, but good news is bad news in this market. Average hourly earnings missed. Now, that's not good for the consumer, good for businesses. They like that. Where things got ugly last week was productivity. The expectation was for decline of 5.2% on productivity, actual 7.5%, but unit labor costs rose. So what this means, the way what you interpret this is that you have a worker. That worker is producing less, but now you have to pay them more. That's a horrible, horrible mix. So that's horrible economic data. The markets did not take that well. That's why you saw the Thursday sell-off. Coming up this week, not a lot. You do have CPI coming out. You do have, I believe the PPI is coming out. I guess not. All right, so consumer price index is coming out. You missed consumer sentiment survey, important read. Other than that, not a lot going on. A lot of inflation data coming out. So buckle up. It's going to be a volatile week because you don't have much in terms of inflation data. You don't have much in terms of earnings data coming out. A few companies that are worth noting. You have not much in terms of economic data. So the trend is down. That means that the trend will probably continue in the path of least resistance, which is to the downside. Now, I mentioned that we had initial jobless claims. I went back and forth with Sarah Eisen on CNBC over the weekend on Twitter, and she posted about U3 being such a great number. How could we ever go into recession with 3.6% unemployment? And I shot back at her. I was kind about it, but in no uncertain terms, grow up. This is the headline unemployment number, 3.6%. That's the U3, total unemployed as a percentage of the civilian labor force, official unemployment rate. That means that this is what the government wants you to see. What they don't want you to see is the U6 number. That's why you come to this show every Sunday night to get told the truth. Real unemployment in this country is at a minimum 7%. Why might that be? Why aren't they reporting 7% versus 3%? It's not good news. So what's the U6 report? Total unemployed plus all persons marginally attached to the labor force plus total employed part-time for economic reasons. They can't get a full-time job. As a percentage of the civilian workforce plus all persons marginally attached. This does not include people who no longer are looking for a job. They're marginally attached to the workforce. So this is why I say at a minimum, our unemployment in this country is 7%, not this nonsense of 3.6%. Don't let them take parking space up in your head. Yield curve. I go over this every week now. I know many of you understand what it is because I go over it. Many of you do not know what it is because it's your first time here. Let me go over it. The yield curve is a measure of 2s versus 10s, 2-year yields versus 10-year yields. When they're declining, that's a sign of economic weakness. It's a sign that you have Fed tightening on the horizon and that you should expect an economic slowdown / recession. We had that. We had inversion of the yield curve only a couple of weeks ago where you had 2-year yields paying more than 10-year yields because people were worried. It's fear. Now you have a steepening of the yield curve. This is when you get worried about equities moving lower. Not when yield curve is declining and inverting. You got to worry about stocks crashing and pulling in when the yield curve begins to steepen. Last week, we put in, this is a monthly chart, we put in a new monthly higher high. Overlaid here in blue is your S&P 500, and we have the head and shoulders set up, left shoulder, head, right shoulder, neckline broken. Path of least resistance is to the downside. The yield curve is signaling recession. 2 weeks ago, we had Q1 GDP come in negative. You need 2 sequential quarters of negative GDP to officially be in recession. That's where we're headed. Valuations of equities. Equities, despite the down week last week, we are still very expensive. 32.46 on the S&P 500, mean 16.94. Very expensive. As measured by the Buffett indicator, we remain overvalued, or 36% overvalued, or 1.2 standard deviations beyond this historical trend. So just when you think we can't go lower, we can go lower. We're still overvalued. And before this is all said and done, in all probability, we will have retested this lower band of support and gone underneath it. That's why you need liquidity right now. You want to keep that cash on the sideline to take advantage of the amazing opportunities that are going to be out there. They're not there yet. So before we go into the bad news, I want to talk about good news. All right, let's talk about good news. And the good news is this, is that the US dollar last week did put in a new higher high. It is flirting with multi-year highs. And as I mentioned earlier, this adversely impacts not just gold, but our exporters, our manufacturers. So I think that the dollar is very close to being done with this move up higher. Doesn't mean I can't be wrong for the next week, but I think in the next week or so, you're going to see a major sell-off in the US dollar. Now, let me back it up with the whys. Why do I think that? Well, we're heading into a recession. 2, take a look at the Japanese yen weekly chart. The Japanese yen is sitting with RSI on a weekly time frame of a 12 handle. Yes, we are going to go lower. This is bearish price action, but I think that we are going to be, in the very short term, we're going to see a bullish reversal bar weekly time frame. I put a video out yesterday. Our top 5 stocks for the new trading week, best stock charts. FXY, the Japanese yen, is one of those trades. We traded it a few weeks ago using options because on a daily time frame, it looked the same as it did on a weekly time frame. I made a bet that we would rally. This is the 28th of April, and we sold into strength and we got out. We have yet to break down to new lower low. Was it 20? No, it was back here. It was back here. The 19th of April, we got long, we sold strength, and we did break down to new lower lows. But I do think that the yen is almost done going down, and we should see a bullish reversal bar soon. Also good news, the VIX. Equities were down last week. The VIX was down too. That's telling you that there's indecision in the market. And I'm going to go to a chart using TrendSpider in a moment. Again, 35% discount code below. And I'm going to show you how, according to TrendSpider's data, we actually closed up on the week last week. And that could be why you saw weakness on the VIX. The AAII Bull versus Bears Index. I went over this last week, and you could see that we have spiked up higher dramatically. So what you interpret into this is that you had a lot of aggressive pessimism, a lot of bearishness. That bearishness is beginning to come off a little bit. And you're beginning to see some buyers. And that's reflected in what? It's reflected in the VIX. Because the VIX was down. It makes sense. Now, the bad news is that I don't think that we're done going down yet. Why? We have a major bear market in bonds. This is not what a bottom looks like on a weekly time frame of the 20-year Treasury bond. What does this mean for yields? Why does this matter? It matters because as long as you have yields moving up higher, it makes it virtually impossible for growth stocks to do well. You need to see bond yields roll over. Now, will they roll over? Sure. Not yet, though. I think we're moving up higher. Why? Yes, the price of the TLT certainly implying that we're going to see yields higher, but also take a look at the price of the 10-year yield. We broke out last week, a major gap up. Now, we will have resistance up at 3.24, and this is where I think we're going. And I will be talking to members about my observations about when we hit 3.24 on the 10-year yield, what will we be doing? We'll be covering shorts, and we'll be looking to buy stocks. Because if we fail to break out over that 3.24 level, which I think is going to be a little bit difficult in the first go around, doesn't mean that we can't pull back, consolidate, and then make another run for it and then break through. But I think that a challenge of 3.24 and a rejection at that level is going to spark a rally in equities. So while I have some bad news I'm going to go over in a moment, I'm also thinking about a short covering rally in the market. Yes, I am short the market, but I'm looking to cover that position and to get net long. So what are the other issues out there in the market that I'm concerned about? Well, take a look at the GSG. This is the iShares commodity index, mostly made up of energy. This is a weekly chart. It's a triangle formation, and guess what? It looks like it wants to break out. What does that mean for inflationary concerns? They go up. What does that mean for gold? It goes down. Why? Dollar goes up. Yields go up because the expectation by the markets is that the Federal Reserve has put on their big boy pants and they're really going to fight inflation, which they aren't. They're not going to do it. It's all BS. They cannot allow yields to normalize on the 10-year or the Fed's fund rate. Why? The reason is because if they ever allowed yields to normalize with the amount of debt that we have absorbed, the amount of debt that we have put on our balance sheet, the amount of our interest payments alone would be the equivalent of the defense budget, which at current over $800 billion a year. That's why they can never allow yields to normalize. This was alluded to earlier in the comments. And the world is crying out for diesel. And that is very, very true, because when you take a look at the price of diesel, it is ripping through the ceiling. So until such time as you see demand destruction, and that is what the Federal Reserve is trying to do right now, I have no doubt about it. They're not trying to fight inflation. They're trying to kill demand. That's what they want to do. And by killing demand, it's their assumption that what they'll do is that they'll kill inflation. Global recession is coming. The two biggest export economies in the world, Germany in blue, China in black, are seeing their new export orders in manufacturing PMIs fall sharply. Here you have it. China in damage control. Germany getting wiped out. The war is not helping whatsoever. So this is a global event that is going on right now. The slowdown in the global economy. What else is going on? There are two markets right now. You have the S&P 500 and you have the Nasdaq Composite. You could argue that you have your micro cap, your ARC stocks, but those have already blown up and they're just going to melt away. That's what's going to happen with them. But what you haven't had yet is a real serious break on the Nasdaq Composite or the triple Qs. I'm going to go into the whys behind that in a moment because I think it's going to happen. But here's the Nasdaq Composite. And what this is the Nasdaq Composite relative to the 10-year yield, the TNX. And you could see, this is why I believe that we're heading lower this coming week, is that our stochastics relative to the 10-year yield are rolling over. They're rolling over down below the 50 mark. That's a lower high. Also, price action. We broke down below critical support last week. So this head and shoulders setup, left shoulder, head, right shoulder, that neckline is in the rear view mirror. So it's no longer a matter of do we break the neckline? We have already broken the neckline. Whereas with the S&P 500, we are also seeing a rollover, but we haven't had that major break yet. The new break to new lower lows. They're holding it by a very thin thread. So this is why I say you have the tale of two markets. What's holding the S&P 500 up right now? You could argue to a certain extent the banks, but to a greater extent, it's energy and food stocks. Again, the tale of two markets. Here's the S&P 500. Flirting with a breakdown. Not quite there yet. But I did mention this earlier. When you're using your standard candlestick charts, we were down on the week. But when you use your hollow candlesticks, or did I get this wrong? I think I got this wrong. The raindrop charts. We actually closed up because what this is volume relative to price. Volume relative to price. And I think that this could be one of the reasons why you saw the VIX close down last week is that you're seeing some stealth buying move into this market because the week prior you had this blue doji, which is a sign of indecision. It's basically like a doji star formation when you have that tight cross, and it's a sign that you may get a trend reversal. This is speaking to us right now. I do think that ultimately we break here, and that's because of two stocks. Let's go to the triple Qs. Now, the triple Qs, unlike the S&P 500, did not flash a blue doji the week before last. It did not flash a green candlestick last week. It flashed a red candlestick. You had volume. Look at the volume here pushing prices down. So there was no forgiveness. It was a down week on volume, net bad. And we broke critical support. This implies that we are going to head lower. Now, why might the S&P 500 and why might the Qs and the S&P 500 move lower this week? Two stocks. One, Apple. Apple has not yet broken yet. You have your double top. Let's get rid of this. Remember that Apple is the second largest component of the triple Qs after Microsoft. We're going to go over that chart in a moment. Now, last week, they're holding it by a very, very thin thread above support using the raindrop charts. And when you use the candlesticks, you could see that by a very thin thread. If Apple puts in a new weekly lower low, I think it's all over. What they may do is rally it up to this support level in an effort to try to recapture. But I want to be short of Apple on a break to new weekly lower lows or an effort to try to recapture support. I think it's going to fail. This is one of the two stocks that is holding up the triple Qs and the S&P 500. If Apple goes and Microsoft goes, it's all over. Okay. Touch. Boom. Our alerts are set here. We're good to go. Stochastics are weak. RSI is weak. Trying to flatten out below that 50 mark, though. Daily view, we're holding on by a very thin thread. As for Microsoft is the other one, weekly time frame, that is holding on by a very thin thread. Look at these topping tails. We broke down the week of the 11th of April. Ever since, retest 1, retest 2, retest 3. I think that this is the week that we finally break on Microsoft. So we'll be looking to trade Microsoft. Here's your head and shoulders setup, left shoulder, head, right shoulder. That neckline is right here. And we'll be looking to short Microsoft. When I say short, it may not be the common stock. I may just sell deep out of the money call options and roll them down as they become more profitable. That's it. Let's do some chart requests. Let's go with some comments first. Okay, we went over that one. Buster Stacks, Cheapy plays solo. Let's go over it. Solo. I didn't go to the members area yet. It'd be nice if I check with my members first. All right, what do we have? GLNG. CrowdStrike. And Tesla. Tesla. Okay. Solo, too. All right. Okay. Let's begin with, we'll go over the member stuff first. GLNG. Weekly chart. This is a tough one. This should look better. Daily chart. All right, so we need a breakout here. I like the chart. I love the sector. The weekly chart is a little bit wonky. I like the fact it's holding its VWAP, the volume weighted moving average in orange. Stokes are rising. I would wait for the breakout here. Volume rose on Friday to the downside. I think it was LNG that was looking really, really good. Chenier, a monster. Look at Chenier. Let's go to the weekly chart. This thing broke out like an animal last week. Boom. This is my favorite. If you want an LNG play, why not go with best of breed? I mean, this stock is telling you it wants to go higher. It's breathing, living, dreaming. It wants to go higher. So I would go with LNG over Golar, no doubt about it. CrowdStrike. Wow, they broke down too, huh? This is a short. It's a short. New weekly lower low. It's coming down to 186 per share. What did we close? We closed at, what did I say? 186? It's wrong. 136. Sometimes the threes and the eights look the same to me. Call it age. We're going lower here. I would avoid this stock. If anything, it's a short on a new weekly lower low. On a weekly time frame, maybe the daily chart will change my mind. Let's bring up our Bollinger Bands. I'll be careful here. I wouldn't short into a third standard deviation Bollinger Band test. While the path of least resistance is definitely to the downside, I'd be very careful because we are kissing the third standard deviation Bollinger Band. For those not familiar, you're not supposed to be there. So we may get a counter trend rally here. That does not mean it's not coming down to my support level. It probably is, but there's too much risk, not enough reward to get short of the stock. So if you're going to try to short it, what I would do is this. I would open up a strangle trade. I would sell a deep out of the money call option, simultaneously sell a deep out of the money put option at historical support and resistance, and make the trade that way. Can we get the yield curve on TOS? I don't know. I'm not sure about that. That's a good question. I think that's a YouTube search. Apple weekly managed to close above 50 SMA. Yeah. Shopify. Yeah, they got killed the other day, huh? Okay, how you doing, man? I haven't seen you in a while. All right. Let's continue on. Tesla. Holding on by a very thin thread. I want to modify this. I want to know if Tesla makes a new weekly lower low. When I type short here, folks, it doesn't mean I'm going to short the common stock. I may just sell in Tesla. I will not be putting on a put side. I'll sell naked calls. I think that this stock could fall dramatically. So we managed to close up on the week. Let's check out the raindrop charts. Indecision bar. Wow, blue doji on Tesla. Let's see how that works out. Lots of indecision on Tesla. Let's go to the daily chart. Daily chart, well, held support. But here's the other way to look at Tesla is that there's a lot of pressure on this stock. We are in a downtrend channel. Here's the value of the automated trend lines. Take them off, throw them on, click of a button, upper band in red, lower band in blue. If we break to new lower lows, we're coming down here, probably to, at a minimum, 775 per share. That's where you have support at the lower band of this volume shelf. Shopify. Big volume last week to the downside. We gapped down. They rallied it in an effort to try to recapture. There was a rejection at the line in green, but there was some success at the lower band in red. I'm looking at the RSI. It's got me fascinated. This is like a cup with downward sloping handle. Same thing on Stokes for Shopify. Daily chart. We close right at support. Shopify is looking interesting. What am I missing here? It does look like we're going lower. Price-wise, look at that volume again. MACD is very extended. Stokes very mature. I like this. I think that we're going to see a bottom fairly soon. Doesn't mean that we can't move down to literally a 200 handle on Shopify. Stokes are rolling over here, folks. Very similar to the chart of the trip Qs. So just be careful. I think we do go lower here, but I think that we are setting up for a rally on Shopify. This is one where I would take it, I would add it to my watch list and look to pick it up because the weekly chart is looking pretty good in terms of your indicators. And I want to repeat, that does not mean the share price is not going to go lower. I believe that it is, but I think that what you're looking at on these indicators is a coiled spring. And that when it unwinds, you're going to get a rip your face off rally on Shopify. So it's definitely one we'll be watching as a potential trade. Oxy. This is Occidental. A lot of whales playing with this stock of late. Let's take the automated trend lines off. A massive breakout last week. It's probably going higher. You are going to see resistance above. Let's put those automated trend lines on now. All right, so this is my manually drawn one. You do have resistance above. Daily chart. I wouldn't be a buyer here. You have a lot of resistance immediately above on a daily time frame as well. So the indicators are looking really good. You need to get a breakout. Okay. Lewis, shop splits on 527, 10 for 1. Didn't know that. Thank you. Hey, team, stuck out on a fire. Catch the recap later. Talon, be safe, my friend. Thank you, great analysis. Thank you. You're very welcome, Mark. Anytime, my friend. All right, let's check back into the futures action. Let's see how we're settling out here. Nasdaq remains down, but it's off of its lows. And it did manage that we broke down initially below support, and we did manage to close back above it. Dollar coming in a little bit. Yields coming in a little bit. Might we get a rally tomorrow morning? Bitcoin getting clubbed like a baby seal right now. Here's the dollar. "30-minute view. This is going higher. Gold prices now negative. I mentioned earlier, I did not like gold prices, and now they're rolling over. As long as the dollar keeps moving up higher, I would avoid gold and the miners. S&P 500 off session lows, but still down over a half percentage point. Is this a dead cat bounce? We don't know. We're not that smart. My bet is it's a dead cat bounce. Nasdaq 100 30-minute chart. This 30-minute bar, we put in new session highs. Are we filling the gap? Could be. That gap, I believe, it hasn't been filled yet. It probably will be. Dow futures, still down a half percentage point. Russell 2000 futures coming back a bit, down spot 63%. Watch for a filling of the gap. Silver futures now down spot 21%. Looks like they're going to break. Avoid silver right now. Avoid gold and silver. I can't believe I'm saying it, but I'm saying it. Wheat up on the session. Nice bullish reversal bar. Good stuff. BBT has nice divvy too. We'll take a look at it. Matter of fact, we'll leave it off with BBT for Trader Isaac. Prudhoe Bay Royalty Trust. A trust. Let's go to the weekly chart. Looking really good. Resistance right up here. I think this is a buy. Note how it found support at this VWAP. Very nice. It's going up higher. Franklin, have a great night. See you tomorrow. Daily chart. We broke out on Friday above this resistance level. This is one of those automated trend lines, folks. If you're not using TrendSpider, again, 35% discount code below. Automated technical analysis. Use algorithms. That's what your competitors are using. Nice. If you get a retest of this breakout point tomorrow, it would be a buy. I still think it's a buy, but I would love to see a pullback and a retest. Okay. That's it for tonight, folks. Thanks for joining in. Trader Isaac, you're very welcome. And if you're not currently a member, please take advantage of our 14-day free trial offer. Like TrendSpider, link below. Everybody have an enjoyable Mother's Day evening. And thank you so much for being here. It's my privilege to be here. And thanks for spending a little bit of time. And everybody have a profitable trading week. I'll talk to you soon. Be well.